Thanks for checking out another clip of the Cashflow Contractor. We'd love to have you as a part of our audience. Click subscribe wherever you get your podcast. Okay, so we've covered quite a bit of things about cash. This has been great. Let's talk about just really easy actions, kind of go through essentially what we've talked about and what people can actually go do right now. And then maybe we can talk about some of the long-term actions they can take. So what's like kind of step one, Lisa?
Know your numbers, know your profit margin, know your overhead.
Okay. And obviously do whatever you can to reduce those things. Review your subscriptions like I did, literally log into every single account, look at the tiers, look at what it costs to downgrade, look at can we remove seats, look at if we can switch people to ACH billing easily, whatever it is, look at all those costs and see if you can and get them down. Insurance, call your broker, see, hey, is this the best rate available? I was about to go call somebody, but just wanted to check.
Yeah,
and see if you can
definitely
get
shop
that
those.
down.
Insurance has been going up, and I just think it's so important to shop the rates.
Yeah, we're doing that right now. Okay, so those are some things that you can do to get your overhead down. As far as knowing your trying to allocate your overhead to your jobs. I don't know if we really covered exactly how to do that. Is it a percentage that you should take? How do you calculate what you should be charging or adding to the bid essentially?
So what I look at is knowing what your overhead percentage is. And then when you calculate your profit per job, what you want to make on that job is just make sure that you have enough to cover what that overhead is going to be and still leave you with net income from that project.
Well, how would you actually calculate that overhead percentage? Are you saying like, okay, I have this project manager who is salaried. How much time is that project manager spending on that job?
So if it is the project manager's time spent on that job, that would be the cost of labor. So that would be above the line. It would be specifically allocated to that project. The overhead I'm talking about is more if you have like an office manager, it's your insurance, it's your subscriptions, it's what you have to pay to run the company. Um, and what I look at that, Khalil, is run a P&L. You could do a rolling 12 months, so you can just kind of see the last 12 months, and then look at it as a percentage of your income. And so then when you look at what your operating expenses are, your total operating expenses as a percentage of the income that you've brought in, that gives you what your overhead percentage is. The
Gotcha. So get
below
your
the
overhead
line
percentage.
overhead
Okay.
percentage.
Percentage
Yeah.
of total revenue.
Yep. Look at it as a percentage of your income. Yeah.
Okay. Gotcha. And then take that
Yeah,
percentage and
revenue.
apply that to your bid, essentially.
Uh-huh. You just want to make
Okay.
sure that your profit from that job is large enough to cover that percentage and then still have your net profit number.
Right.
You brought up a good thing with the labor, and this kind of goes to know your numbers, is to really take and know who's working specifically on that project and having that labor amount allocated to the project. Because I see a lot of people who just put their supplies to their project costs, but they're not thinking about the GC that might just spend a few hours, but that still needs to be allocated to that project. That all of those labor costs need to hit that project.
And the cool thing about right now is that's pretty easily done. The guy I talked to before we got on for this podcast, we're trying to allocate labor to projects, and their QuickBooks will do it. There are all these apps that'll do it. They don't cost very much. And people keep their own time, and they have to know which job they're working on.
Yeah.
And you can do job costing. It's outside of your books, but you look at that job, and this is what we actually spent. Well, it's in your books, but I mean, you split out to look at it. Yeah. And that's more important than anything else. Understand, am I making money on this job? And then the only place where I do it a little differently than Lisa is, if we have a job, we have to have enough margin to cover overhead. Absolutely. But sometimes that means we got 4 jobs, and combined, they cover it, right? So if you're, anyway, so that's the only place we think a little bit differently. I just think total amount I got to sell at that margin to pay all that overhead. But essentially it's the same thing. You're not making any money just because you did a job. You got to take the money that you made on that job, pay your overhead. If there's anything left over, you might have made some money.
Correct.
Yeah.
Correct.
Okay. Another thing we said, if you are in a good cash position, go flaunt yourself to all the bankers in town. Is that the term? Just start going to all the free lunches and all the. Is that
Get to know
what they
your
should be
banker
doing?
friends. Yes, yes.
Yeah.
Something that Khalil, we had talked about is, it might not have been you. This was a conversation I was having with a client. And so like, well, when do I finance a car or when do I pay cash for it? Kind of knowing how to make that decision. And so, and that kind of lent itself to, what do you want to do with your cash? Because it's easy to get a loan for a car, even though the rates are pretty high right now, but it's really hard to get a loan to cover operations. And so when there's not an asset that can be used as collateral for the loan. And so that's just kind of something to think about as you look at what your long-term plans are is, yes, you might have cash to pay for that car, but if you want to invest that in the business somehow, it might be better to take a loan for that so that you've got that cash freed up for other things that wouldn't be as easy to get a loan for.
Yeah, that's a good point. Hadn't thought about that with where rates are right now, but yeah, finance the car.
I know they're high. It's high for cars. It's, it's even higher for like a line of credit, and it's almost impossible for someone to get an operating loan if they're, struggling right now.
Yeah. Interesting. Okay.
There's a few. There are some people I know that will do where they do a loan against receivables. So that can definitely be done, but it's not. It's just it's a little bit more cumbersome, and the rate is higher than what you'd be paying on a car loan.
Thanks for checking out a clip from the Cashflow Contractor. We have full episodes where we go deep on topics that help you grow a construction business that runs without you, so you can have less stress, more time, more money. Now, we've got other videos, other clips, but if you want to check out the full episode for this clip, you can click wherever our editor put it. It might be here, it might be there, it might be over my face, I don't know. But thank you for checking us out. We'd love to have you as a part of our audience. So subscribe or check out a full episode wherever you get podcasts.